Hey friends, welcome to this video on the Donchian channel indicator. And I'm going to show you a few things here that might be a little unusual. We'll show you some traditional stuff, and then we'll show you some other options on how to trade this. By the way, this is essentially a trend trading or trend following approach. And well, if you've heard of the turtle traders, this very famous group, and this is basically how they trade, the same concept at least of how they were trading. And it works really good in trending markets and not quite as well in non-trending markets, but there's other things you can do to watch for non-trending markets. So, and that would be very important when you're using this. Now, I'm going to show you something that's pretty, usually these are used on daily charts, weekly charts, things like that, but you can use them intraday as well, for sure. So I'm just going to cover some basic things. When you put in a new high, in other words, well, let me first of all show you my indicator setups here. So the settings, let's see. So I've got volume there. That's one thing you may want to add to it. And then the Donchian channel here, I'm using a period of 20. Okay, that's adjustable. And so first of all, let's just look at that. Then I'm going to bring up a little pro tip number 2. So you get a moving average here as well. And that comes with the indicator. It's right in the middle. And so basically, it's kind of a breakout type of strategy. You're looking as this line comes across here, and you're looking for bars to come up into it, and then for the Donchian channel to start moving up. So it is measuring new, basically in this case, 20 bar highs. And we break out of that range, then it provides a long signal. Comes down, break below the 20-year or 20-day lows, or 20 period lows, I should say, 20 bar lows, and then you get a trend going down. Okay, so pretty basic, simple. Again, I'm just gonna, that's just the simple concept of it. So as you can see, for trend trades, one of the nice things it can do is it can keep you into trends that are going to go and go and go and go. So you might want to use this tool as just part of your trading methodology. Perhaps you don't want to use it for entries. Maybe you're not a breakout type trader, but you want to have something in place that'll keep you into big trends. So that might be one choice of using this to keep you into trends when they do get really big. Now, another little secret sauce here that I've added, you'll notice it says range, and here range. So because the indicator is based on the high-lows of so many bars ago, you can use a different type of bar and kind of do a double doozy here. Double doozy. That is a professional trading term. So what you do is you go into, well, you just change the bar type, however you do that on your trading platform. So, normally we're going to use like minute bars or daily bars, weekly bars, right? That's what most people use. Now, because this is a range indicator and you're looking for new whatever, period highs and lows, you can double duty on that by using range bars instead of volume bars or tick bars or time-based bars. Now a range bar, what that means is then, so for example here, value of 60. So it's not going to form a new bar until you get 60 increments, 60 ticks, whatever that is in the market that you're trading, whether it's futures, that would be a tick, whether it's pennies or pips, whatever. So that is then going to double smooth the pattern. So these will not form on every bar. No, I mean, not every bar will be a certain period long of time. It's not a time-based bar. And so here you are overlapping two type of smoothing. For those of you who like real smooth charts, want to stay out of noise and so forth, the range bars will only form when that amount of range, whatever you choose to decide, 60 in this case, the price has moved, the market has moved. Now, you could still get some chop in here, right? And that's the thing. Every type of smoothed bar, every type of smoothing average, remember, if you do, the more smoothing you do, most people think, oh, that's good, that takes the noise out of the market. Not necessarily. It will take the noise out of the market at that scale, whatever you set that scale to. But there's always, there's the next level of noisiness, next level of random range, and you never eliminate it. And so you just have to decide. So this whole thing of smoothing price action, it's not BS, but every level of noise reduction has a certain filter to it, which can be helpful on a certain scale, and then it reaches a point where it goes back into the noise relative to that scale. So when you put the two together, this is my point, put range bars together with the Donchian channels, okay, now we're looking for some better signals, potentially. Again, this works great in a trending market, like a lot of stuff, right? Trading markets, easy to trade, but how do we know if they're going to trend before they trend? And you never know, but it's another indication that maybe so. So as this goes up, okay, boom, let's say you wanted to trade here. Now, again, you can add volume to it if you want to as a separate indicator. And so we're riding this up, stays, so it goes flat. Okay, that's okay. We got to break this high for the channel to go back up. It does. Now, with range bars, you're not going to get exhaustion patterns like you would on Japanese candlestick patterns. So you may still want to use your traditional Japanese candlestick pattern. You got your moving average here. Okay, and now there's a couple of ways people will get out of these trades. One is like this. They'll wait for the bars to come back down like this. Others will use the moving average. Others will wait for the price to hit the other channel. Okay, I would not wait for it to hit the other channel myself, but if it comes down here, that indicates, okay, cool, we've got a move down, starting a new downtrend potentially. Wait for it to retrace back up here. And then, now some people will actually trade it right here, looking at big volume coming in to the downside, and they'll say, okay, we're in a downtrend, we've had a retrace, big volume comes into the downside, so I'm going to enter here, get you a little earlier than waiting for the breakout, right? Because breakouts tend to get you in, well, they can get you in late. That's arguable, obviously. They're getting you in after something has already been broken. Now, again, remember, just because something breaks out doesn't mean it's going to continue. You get a lot of false breakouts. And that's why I actually prefer to get into what some consider a riskier trade. I don't consider it a riskier trade. I just consider it an earlier trade. And I have a trend I've got my trend indicator, but I also have my cycle indicator. And my cycle indicator shows me exactly when to enter the trades. And so that's why I can get in earlier here. I don't wait for breakouts. I never wait for breakouts because my cycle indicator tells me when to get in before the breakout. Be happy to share that with you, by the way. I've done a live webinar on that, but actually now it's recorded for you. So that's actually better because you can watch it anytime that's convenient for you. So go there to get it, indicatorwebinar.com. Okay, and then again, boom, retrace, boom, retrace. Now, just like anything, the longer the trend continues, the less likely it is to continue. But notice up here, if you look at the top line, the upper channel has never gone back up, right? It doesn't go back up until you get here. And so then that's where some people will get out. To me, that's a little late to the party. All right, so again, up, 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 up. Now notice, comes back down, hits the lower band. Some people use that as an exit, but the lower band has not gone back down. And so therefore, that is not really the best exit. You're giving back a lot of profits, and the trend has not necessarily changed. So you kind of get the worst of both worlds with that strategy, in my opinion. So I would prefer going down here, boom, retrace, cool, enter there using my cycle indicator. Again, happy to share that with you. And then I'm already in before we break the range and before we ride the channel back down. Down, 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 down. Again, up, 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 up. So the bottom line, combination of the Donchian channel with range bars, double smoothing, easy patterns to see, not a lot of detail to read, and give it a try. I would encourage you to add any other tools that you like, any other indicators that you like to this as well to improve your odds.